It's the Loan Show on KSRO with George Adair. Call in with your questions now at 636-1350.
Good afternoon, Sonoma County. This is George Adair. I'm signing on to the Loan Show on KSRO 1350. This is the show where we discuss everything mortgage, how it impacts your life, and how to improve your personal balance sheet. Give me a call, please, here live in the studio, 636-1350, 636-1350. This show's a lot more interesting with your calls, as demonstrated by last week's successful 4 calls, right, Michelle?
Yeah, we even had one that we couldn't get in. So, and this show will go by really fast.
Yes.
So if you have a question, if maybe you were listening last week and you thought, wait a minute, I need to ask George a question, now is the time to give us a call at 636-1350, 636-1350.
And folks, you can also send us an email after the show. I checked the emails, and we actually did get a couple last week. That email address is loanshow@ksro.com.
Yep.
Okay. Hey, folks, I'm a licensed real estate broker. I also hold an NMLS license to originate loans and give you good advice about lending in today's 2012 craziness. Been in the business for the past decade. I'm a third-generation real estate and loan guy. I'm also the area sales manager for a successful mortgage bank called Bay Equity Home Loans. We've done over $3 billion in loan volume, and we offer FHA, VA, conventional, and HARP loans. We were actually recently ranked 5th fastest growing company in San Francisco. I have a local office in downtown Santa Rosa on the corner of 4th and E Street. It's a brick building across from the library. A lot of you have been walking in, stopping in to say hello. Thank you for that. I welcome your questions now. Again, that number is 636-1350, 636-1350. We had some good discussions last week about credit and had some questions about whether it was appropriate for some of you to refinance. Those are the type of questions I like to answer. I do it all day, every day. Sometimes I have my friends who call me and they ask me questions, and I say, well, that's exactly why you need to call me on the radio show. It gives us some stuff to talk about. Today's question is something that I field quite a bit given the change in the economy, potentially even the more optimism that's been coming in the housing market. The demand for housing is pretty high right now, and the inventory of houses is actually pretty low. Michelle, I don't know if you track that at all, or if you...
No, I'm not a tracker.
You're not a tracker. you know, if you look at the real estate section of the local newspaper, they have a lot of good data on numbers. So I'm not going to bore the audience with data, but I will say in general, there's a lot of momentum in buying houses because generally the inventory is a little bit low, it seems like. There's also a lot of cash being spent on houses. So people are seeing their neighbors buy houses. They're seeing their friends and family buy houses. And I wanted to pose the question today, which is, are you still in that, quote, stepping stone house? And are you trying to figure out how to get into something better and bigger? A lot of folks got into a house in 2004 through 2009, and they rode the market with it, grew a family maybe, had plans, the 5 to 7 year plan of using that as their first step. But I think it's turning into the entire staircase for them.
Yeah.
They are finding that it's been unrealistic to get into a new house for the last couple of years because a lot of people ended up underwater. A lot of people got unemployed. Maybe they let their credit go, filed bankruptcy. So I wanted to give you some ideas, some tips on what it takes to buy a house again, knowing that you already bought your stepping stone house. A lot of folks also bought houses with their parents as co-signers or with other family members as co-signers. And those family members have been very patient and knocking on their door, figuratively speaking, saying, hey, can you get this thing refinanced so that you can get me out of this loan that they co-signed for? So if you have questions, give us a call here, 636-1350, 636-1350, and we will talk about that. So here's a scenario for you. A lot of people bought a house, probably 1,200 square feet, 2-bedroom, 3-bath. Maybe it was in Montgomery Village. Maybe it was in Rohnert Park or somewhere in Windsor. Really nice house, but they knew it was a stepping stone house. They didn't expect that they would live in that house forever. Apply it to so many people. So many first-time home buyers got houses over the last 7 years. So now they want to get into something bigger. And they're finding that the price of a bigger house is the same or even less than their small 1,200 square foot house. That's an interesting quandary for the market, because what do they do with the house they're in now that they're potentially upside down in, and how do they qualify with that current payment that they're upside down in because they can't sell it yet, and buy a new house? There's a lot of different strategies that people throw around, the news throws around. One of them is the buy and bail strategy, which is really a very negative thing, and it's terrible for our housing market. I really want to discourage that, and that's part of why I want to have this show today. So buy and bail is, I'm going to use my good credit and the fact that I have a job, and I'm going to go buy another house, and then I'm going to default on my existing house. And people, they justify that by saying, hey, I'm going to get mine, right? The bank's got theirs. I'm going to get mine. They're not going to help me modify anymore, or they feel entitled. So people, maybe some of them it's justifiable. They've tried for a long time to work with their bank to get out of that loan they're in. Some have adjustable rate mortgages. They're just outright too much money for them to keep borrowing from Peter to pay Paul. So buy and bail is a negative way of handling the situation. So here's an idea for you. Keep your house. Get a tenant, because rents are up. Rents are up over 5% over the last couple of years in this marketplace. Rent your house out. Get a lease. Get a deposit check. Call Bay Equity Home Loans. My team will pre-approve you to go buy a new house. So now you've got two houses. You haven't bailed on your obligation to your current lender.
Right. And
you've got yourself a really nice, maybe 1,800 square foot house. For example, you could buy a $350,000 house today if you just put down 3.5% for an FHA loan, and you disclose that you're going to be departing your current residence. So this will be a new owner-occupied loan. We just need to show that you have enough reserves to maintain both payments for several months.
But if you have a tenant, then you can take care of that first place.
Yeah, you can, but you still have to stand on your own 2 feet.
Gotcha, okay.
With your own income. Now, if you've been fortunate enough to already have rental properties and you could demonstrate that you've been renting in the past as an experienced property manager, then you're able to use the rental income from the new property to qualify. Okay. I have a gentleman right now. It's the strangest scenario. Great guy, great borrower, real smart with his money. Doesn't make a ton of money, but has been really smart with what he has. Bought a house with a granny, rents the granny, discloses it for the last 2 years on his tax returns. Bought a condo, rents the condo out, cash flow positive, actually makes money every month. So he makes almost as much money between his condo and his granny unit as he does as a W-2 employee at his job. Currently, it's very frustrating. I cannot get him refinanced because he's not at a point where the value is there, and he doesn't qualify for HARP because he did this all in the last couple of years. And the HARP loan, this is the Home Affordable Refinance Program the government's put out. We've talked a lot about it on this show. You have to have had that before 2009. Oh, okay. June 1st, 2009. So this gentleman has these two properties. I can't refinance them. I'd love to, but it doesn't make financial sense to do it at this point. But I can qualify him to buy a third property. It's not going to cost him anything more except for his down payment. He's going to put 20% down, probably buy a $150,000 condo. He'll rent that thing out for $1,200. He'll probably pocket $200 to $300 a month.
Huh.
So there's an example of how you use today's market with today's really low interest rates and today's pretty flexible underwriting guidelines. A lot of people think, it's hard to get a loan. It's difficult to get a loan if you are self-employed and you don't show your income. Or it's difficult to get a loan if you have a lot of credit card debt and your income doesn't balance out enough to cover your debt. However, there's a lot of people qualifying for mortgages today. The problem is they're qualifying with the wrong companies, in my opinion. They're calling the big banks, right? They're calling Bank of America. They're calling Citi and Chase and Wells. And quite frankly, they should be calling Bay Equity Home Loans before they make a decision. So if they do decide they want to give us a call at Bay Equity, our number there is 583-8100. That's 583-8100. If you want to call us here at the show, our number is 636-1350. 636-1350. We're taking your calls. I want to answer your questions about quote-unquote buy and bail. I want to also answer your questions about a good business strategy for you to buy investment property and understand how today's loan program guidelines can help you do that. You might be surprised that the average Joe, like the gentleman I just talked to, makes more money from his rentals than he does off of his regular income. He's a smart guy. He's a young guy, and he's doing pretty well for himself. So we're welcoming your calls. Again, 636-1350, 636-1350. I am George Adair, live on The Loan Show. We're going to go to break. Hope you'll give us a call.
To find out more about Bay Equity Home Loans, call George Adair at 707-583-8100. That's 707-583-8100.
Hey there, Sonoma County. This is George Adair, host of the all-new Loan Show on KSRO. I'm inviting KSRO listeners to join me on Wednesday at 12:30 for a lighthearted but informative look at mortgage and real estate matters that affect you. I want your calls and questions, so join me Wednesdays at 12:30 for the Loan Show on KSRO. Folks, you know I'm always touting the benefits of a 15-year fixed loan, right? My logic is simple. Most people will save over $100,000 in interest. You could actually own your home free and clear by the time you retire. I want you to know that Bay Equity Home Loans is offering a 15-year loan at 3.25%, APR 3.39%. So call me at 583-8100 and see if you qualify for this amazingly low fixed rate loan and start paying your loan off for good. Call 583-8100 and see how much you can save. That number again is 583-8100. Don't forget to tune into The Loan Show on KSRO every Wednesday at 12:30.
Department of Corporations number 6053919. NMLS 238915. Equal housing lender.
Because it's an easy way to do the right thing.
Bring your unwanted working and non-working electronics to our collection events.
Let Sonoma County Waste Management Agency and Goodwill Industries of the Redwood Empire help you do the right thing.
We'll dispose of your electronics properly and keep them out of the landfills.
Just come to one of our free collection events and drop your items off.
Log on to recyclenow.org for a list of locations and directions to this month's free e-waste recycling event with the Sonoma County Waste Management Agency and Goodwill Industries of the Redwood Empire. Bring your TVs, computers, and electronics, or large quantities from your business, telephones, cell phones, keyboards, printers, and bring your clothes and household items too. It's easy to do the right thing. Recycle and donate today.
Log on to www.recyclenow.org for a list of dates, times, and locations for all our recycling events.
An equal partnership with the Sonoma County Waste Management Agency and Goodwill Industries of the Redwood Empire.
Sometimes it's easy to do the right thing.
Thank you for calling vacationsandstuff.com. Looking for a hotel? How about a car? Are you sure you don't want a car? What about tickets to a show? No? Then how about the car? We've got pony rides. Why not? Not for you? What about a cruise? It's just like a hotel, except it floats. How about a
Sometimes you just need a hotel. When you do, go to Hotels.com.
How about a facial then? Back wax? Stone massage?
With over 20 years of experience and over 140,000 hotels worldwide, why go anywhere else? At Hotels.com, finding you the perfect place is all we do. Check out amazing deals in Vegas, LA, and San Francisco.
On to round 3. If a train leaves Spokane...
Schenectady by Saturday.
Correct. March comes before May. What's in my left pocket?
Half a mint and a rusty switchblade.
Correct.
Bam.
Who lets you watch TV episodes and movies instantly over the internet?
Ha-ha! Netflix.
Correct. Watch unlimited TV episodes and movies for only $8 a month from Netflix. See terms of use.
That is rad.
I know. Can you put me down now?
Sorry, I'm a hugger.
It's The Loan Show on KSRO with George Adair. Call in with your questions now at 636-1350.
Hey, welcome back. I'm George Adair with The Loan Show on KSRO 1350. We are talking about a couple different concepts related to credit and relief programs. We're also going to get into modifications, and I want to get into that in this next segment in a little detail. We had a question over the break, which is, I think, really relevant here. What happens if you buy and bail? How does that look on your credit report? If you decide to default on your mortgage, it's considered a very negative feature of your credit. It could drop your score by as much as about 150 points. It's a really bad thing to do. A lot of people we know chose to default because, again, it was strategic for them, or they just couldn't afford their house. We talked a little bit about last week on how long it takes to recover from such a thing. So the derogatory event on your credit, such as a notice of default or a short sale or a